Okay, imagine this. You step into the market today, September 2nd, 2025, and the big picture, it's painted with caution, lots of macroeconomic anxiety.
hmm
But then you look closer, and in specific spots, company news is causing these huge explosions, these opportunities.
Right, it's a really split picture.
That's what we're diving into today. We've sifted through a stack of pre-market reports, analyst notes, just to give you the shortcut,
Yep.
uncover what's really setting the tone.
And the immediate tone is, well, it's down. Major indices, U.S. and global, pointing lower. Pretty broad risk-off sentiment.
Yeah, risk off is definitely the phrase. So what's behind that?
Well, first off, there's intense scrutiny, real focus on the health of the U.S. economy.
Okay.
And the big data point there is the ISM Manufacturing PMI report. That's out at 10:00 a.m. Eastern.
Right, the Purchasing Manager Survey. Crucial one.
Exactly. It's pivotal because it could really confirm these sort of growing recession fears we've been hearing about.
It could surprise, maybe.
Or it could signal some unexpected resilience. So yeah, everyone's watching that.
And adding to that nervousness, the VIX, the fear gauge.
Yeah, it's spiked. Up, what, over 17% in pre-market? Sitting at 17.0.
Wow. So that signals traders are expecting turbulence, hedging.
Precisely. Active hedging, buying protection against potential drops,
Yeah.
and then you've got geopolitics stirring things up too.
The Russia-Ukraine conflict.
Renewed escalations, specifically these attacks on Russian energy infrastructure.
And that's pushing oil higher.
Directly. WTI crude futures, they're up almost 2%, around $65.21.
Which means inflationary headwinds, right? Complicates things for central banks.
Absolutely. Makes their balancing act between growth and inflation even tougher. But, while that macro picture is cautious,
Yeah.
the really fascinating part for you is the split market we mentioned. Two very different stories playing out, especially around AI.
Totally. The whole AI narrative, it's changing, isn't it? It's not just universal hype anymore.
It's much more discerning now.
Like NVIDIA, huge profit, right?
Yeah.
$26.4 billion on record revenue. But the stock's facing pre-market pressure.
And why? Because the market's scrutinizing a slight slowdown, just a slight one, in its data center growth rate.
So it's not just about record results anymore. It's about the nuance, the growth trajectory.
Exactly. The market wants tangible, high-growth application, not just, aspirational talk. It's maturing.
Right. And then you see the other side, Alibaba.
Oh, yeah. Extraordinary surge. Up 19% in Hong Kong.
Why? What did they report?
Triple-digit growth in their AI-related products. Less a really strong 26% jump in cloud computing sales.
So real execution, tangible growth being rewarded. Big time.
That's the key. And it's not just the giants either.
No, definitely seeing a stock pickers market emerge, especially in the smaller caps.
Like what?
Well, Professional Diversity Network, IPDN, it's soaring like 246%.
Wow. On what news?
A non-binding agreement, a memorandum of understanding to develop a Web3 digital investment banking platform. Blockchain, decentralized finance.
Interesting. Hot themes driving huge moves.
And Movano, MOVE, that's up over 80% just because they got a NASDAQ listing extension.
Which is a big deal for a smaller company. A vote of confidence. Shows how specific news can totally override the macro mood.
But profitability still matters, right? Look at Cineverse, CNVS.
Yeah, down over 18%.
Yeah.
Their Q1 earnings missed analyst estimates on EPS, the earnings per share.
Even though revenue beat.
Even though revenue beat. It's a clear signal. Right now, the market wants profit. Bottom line over top line, in many cases.
That focus on real numbers, it's echoing elsewhere too, isn't it? Across asset classes.
Definitely. Classic flight to safety. Gold is up over 1%.
The traditional safe haven.
Yep. And the U.S. dollar is strengthening against the euro, the pound. Global investors wanting stability.
Okay, but the bond market's acting a bit weird.
That's where the tension is. It's fascinating. 10-year Treasury note futures are actually declining. Prices are falling.
So people are selling bonds. Why? If it's risk off.
It's a tug of war. Some investors want bond safety away from stocks, sure. But others are selling bonds because they fear inflation from those rising oil prices we mentioned.
So it's a battle between stock market fear and inflation fear playing out in the bond market.
Exactly. Watching how that resolves today will be a crucial tell about which fear is winning out.
So bottom line, keep an eye on that ISM Manufacturing PMI at 10:00 a.m. Eastern. That seems like the major inflection point.
Absolutely. It could confirm the downturn or spark a pretty significant reversal.
Okay, so summing it up for you listening. The market's starting September defensively. Got these broad economic worries.
Right, but at the same time, You've got these pockets of hyper-speculative moves driven purely by company news.
It's a challenging setup. Intriguing, though.
Very much so.
And maybe a final thought to chew on. Think about how that prevailing mood, that risk-off feeling, colors how we see everything else. When collective fear is high, are we maybe overlooking genuinely good companies, good execution, just because they don't fit the big gloomy narrative?
That's a great question. How does the overall story affect how you process new information, how you look at potential investments? Something to really consider today.